Hello everyone, Brent Bruce here, getting back to you on part 2 of our VA home loan education series. In part 1 we talked a little bit about that there is not a maximum loan amount specifically for VA home loans and kind of how that works. You can take a look at the previous video if you want to learn a little bit more about that. But today what we're going to talk about is closing costs. I think that's probably the biggest misconception out there right now, is understanding who can pay the closing costs on a VA home loan. It's very common that people think, especially people that have been in the business a long time, think that the seller has to pay for a portion of the buyer's closing costs if they're using a VA home loan, and that is not the case. So I'm going to explain a little bit of that to you right now. It's such a common misconception that back on May 7th, the Department of Veterans Affairs released what they call a policy clarification on unallowable fees. And I'll try to put an attachment somewhere here on the video for you to be able to access that. But what it was doing is trying to explain how the policy works for closing costs with veterans. Now, if you read through it, it states that there are certain fees that the veteran cannot pay. Okay? Now, first of all, I want you to understand that it says the veteran cannot pay, not that the seller has to pay. Okay? So someone else can pay that. The lender or the agents, if that makes sense, can pay that. So the seller is not required to pay a single fee on a VA with a VA buyer. All right. Now, if you read the policy carefully and you go into the VA guidelines and all of how it really works, it talks about a list of fees that are you can't be paid for by the veteran. Now, this is going to be underwriting fees, doc prep fees, processing fees, escrow fees, termite report fees. There's quite a bit. However, if you look further into it, what it says is that you are allowed to charge a maximum of 1% in lender fees. Okay. Now, in that 1%, any of those items can fit. So if you are charging doc prep, underwriting, and those other fees, but it equals in aggregate 1% or less, you're okay. Okay, so that's the number one thing that needs to be understood too, is that as long as the total of those fees is 1% or less, you're okay. So if this is a $300,000 loan, you have $3,000 to work with to pay for those specific fees. And it's not all closing costs. The title insurance is not part of it. Escrows and impounds for taxes and insurance are not part of it. So there's quite a bit that doesn't count anyhow. But of those fees that do count or that are on that list of unallowable, it can be charged as long as it is an aggregate of 1% or less. Now, what if it is more? What if that total is more than the 1%? Say it's a $100,000 loan amount and you have $1,500 in non-allowable fees. Well, first of all, the 1% covers $1,000. So you have $500 left. Now, the lender can pay for that. The lender can increase the interest rate and have a rebate going back to the client. Or if it's negotiated for one of the agents to pay for a portion of it, or yes, if the seller has agreed to give some closing costs, that can cover that as well. So if you're in a contract where 1 or 2 or 3% of closing costs are being paid for by the seller, that's going to cover that fee. That's going to apply, and now you're within guidelines. But I think the big thing is just understanding that 1% rule. In the past, a lot of people thought that they could charge 1% origination fee. They understood that, but they were trying to charge all of the other items on top. If you remember years and years ago, it was very standard for lenders to charge 1%, 1 point on everything. 1 point, that was just standard. And then they had processing and underwriting and doc prep and all the other fees on top. And that's where the VA stepped in and said, no, we're not going to allow that. Now these days I think it's a lot more common for 0-point loans. So you may have some fees like the doc prep and underwriting, but you're not going to always have 1 point, 1 origination point on top. So as long as those fees total 1% or less, you're okay. Just want to make sure that you understand that the seller does not have to pay for any closing costs when you're doing a VA transaction. It's not required. We've done many transactions. I don't know how many transactions I've done where the seller has not paid a dime on a VA home loan, and even transactions where the seller hasn't paid a dime and the buyer hasn't paid a dime because of rebates and different ways of working the numbers on the lender side. So there's a lot that can be done with a VA home loan. The main thing that you need to do is make sure that you talk to your loan officer, that you're using a loan officer that is a professional, if not a specialist in VA lending, because it is something that needs to be structured properly so you don't run into issues at closing. My information is going to be at the bottom of this video or email that you've received. If you have any questions, feel free to give me an email or give me a phone call. I'd be happy to help, because the main thing we want to do here is we want to make sure that people understand that veterans deserve to use this benefit. It's something that they've earned. We should not have a situation where people are pushing away from VA offers. It should be the offer they go towards trying to accept to thank these people for the service that they've provided for our country. So definitely ask your clients when you meet with them, are you a veteran or active duty? Have you served in the military? And if so, let's see if we can put them into a VA home loan. Let me know if you have any other questions. Thank you very much.